Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Intuitive Surgical Inc. quarterly report. Intuitive Surgical, Inc. offers a range of businesses and services that enable minimally invasive care. The company's main products include Da Vinci Surgical System for surgical procedures, Ion Endoluminal System for diagnostic endoluminal procedures, stapling, energy, and core instrumentation for multi-port Da Vinci systems. In addition to its products, the company provides various services, including installation and repair of equipment 24/7, technical support, proactive system health, monitoring, progressive learning pathways for technology use, integrated digital capabilities with connected offerings and performance insights. The fluctuation in Intuitive Surgical Inc.'s ISRG stock price over the past year can be attributed to several key events. The company's strong Q3 2025 earnings report, which exceeded revenue and earnings expectations, led to a significant increase of 16.4% in its stock price. However, this was followed by an analyst downgrade from Deutsche Bank, resulting in a 6.2% drop in the stock price due to concerns over competition from lower-cost remanufactured instruments. Despite these fluctuations, Intuitive Surgical's overall 12-month performance shows that it has experienced significant changes, exceeding the 3.59% threshold. The company's stock reached an all-time high of $610.45 and a low of $425 within the last 52 weeks. These events demonstrate that ISRG's stock price has undergone notable fluctuations over the past year, driven by both positive and negative news events. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown significantly due to an increase in product and service sales. Product revenue grew by $400 million, while service revenue increased by $67 million. The number of Da Vinci procedures performed also rose by 24% and Ion procedures by 52%. Additionally, the company saw a net income increase of $427.6 million. Revenue decline drivers. On the other hand, revenue decline was driven by several factors. Decrease in short-term investments led to a loss of $143 million. Tariffs and trade measures increased cost of revenues by $59 million. Macroeconomic environment challenges such as supply chain disruptions, inflationary pressures, elevated interest rates, and commodity market disruptions also contributed to the decline. Furthermore, hospital industry challenges like staffing shortages, cost pressures, and financial strain due to supply chain constraints and inflation added to the revenue decline. Net income and profit margins of Intuitive Surgical, Inc. experienced significant changes between 2024 and 2025. Net income increased by 24.3% in 2025 compared to the previous year, reaching $709.2 million. This growth was consistent across various periods, with a 26% increase in net income for the 9 months ended September 30, 2025. However, profit margins showed mixed results. The gross profit margin (GPM) decreased by -0.7%, while the operating profit margin (OPM) increased by 2%. This indicates that despite higher revenue, the company's ability to retain profits through cost control and pricing strategies was not as effective in 2025. The decrease in product and service gross profit margins suggests that the company may be facing increasing costs or competition in these areas. Nevertheless, the overall increase in net income and operating profit margin highlights the company's resilience and growth potential. The company is indeed generating positive operating cash flow. This is evident from the significant increase in net cash provided by operating activities, which rose to $2,138 million in 2025 compared to $1,592.4 million in 2024. This substantial growth indicates a strong financial performance and ability of the company to generate sufficient cash from its core operations. The company's debt level has undergone a notable shift over the past few pages. Initially, it increased to $844.4 million before slightly decreasing to $839.7 million, representing a minor decline of 0.1%. However, a more significant change is observed in long-term debt, which skyrocketed by an astonishing 420% from $94.1 million to $491.2 million. Despite the fluctuations in total debt, It's worth noting that interest expenses remain unreported on several pages and show no indication of significant changes elsewhere. Management is optimistic about the company's outlook, highlighting several key strategies. The company aims to deliver value by synthesizing scientific and technological advances, expand access to high-quality care through partnerships, and innovate its products. Management expects revenue from usage-based leases to be volatile, but anticipates funding future growth through cash provided by operations. They also plan to seek additional FDA clearances and invest in infrastructure to scale the business. Overall, management is committed to innovation, expansion, and continued investment in research and development. And the company has a history of share buybacks, with notable transactions including repurchasing common stock worth $2.1 billion, buying back approximately 4 million shares in the 3 months ended September 30, 2025, valued at $1.9 billion, having repurchased a total of 985,341 shares. These actions demonstrate the company's commitment to returning value to its shareholders through share buybacks, rather than paying dividends. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals potential issues with inventory levels, indicating a buildup of stock that may disrupt the supply chain. The data shows a significant increase in inventory from $1,487.2 million to $1,781.9 million between 2024 and 2025. Furthermore, finished goods inventory increased by $307.9 million over the same period, suggesting an accumulation of unsold products. The equipment transfer from inventory to property, plant, and equipment also rose by $156.3 million in 2025, hinting at inefficiencies in the supply chain or a potential increase in inventory levels. These indicators raise concerns about the company's ability to manage its inventory effectively, which may lead to supply chain disruptions if not addressed promptly. That concludes the financial summary for Intuitive Surgical Inc. Feel free to comment below, and I will be happy to answer them when possible.